Yeah, good morning, everybody. It's Monday morning. It's around 5:45 my time here out on the West Coast in California. Just doing a quick morning update on where we're at with the market. I thought it would be relevant given the positions of the indexes and what we've been seeing going on with leadership. You can see from my screen here that the Nasdaq Composite Index, very similar to the S&P 500, is heading for its 200-day moving average. You can see futures over here. Nasdaq, the minis up 7, the S&P minis up 5.25. We'll see how those look in the next 45 minutes as we approach the opening. But what I would point out simply is that we've come down for 7 days in a row. You had one upside day on Thursday, which is very brief, very weak volume, so no real buying interest. And you had a pickup in volume on Friday. It's taking you closer to the 200-day moving average. Now, as I view it, I tend to look at moving averages more as fuzzy zones, and so I think you could find support here. You could find support uh, below the 200-day moving average, maybe undercut this low here before you try to start a rally, or you could just start a rally from here. So with the futures up this morning, I'm not looking to come right in and start shorting stocks because a lot of these have come down 20, 25%, sometimes more than that in some cases, given the short sale targets I've been looking at, such as, say, Finisar. But right now you're in a position where you could bounce, and some people might not be too happy that the timing model has been on a neutral signal throughout this break after going to a neutral signal here on this. What was really a phony follow-through day. But one thing I would remind you is the timing model is designed to capture decent trending moves in the market where you can play ETFs and sit with them for several months and do pretty well. In cash, you're outperforming the market. So that's really the bottom line here, is to play defense, because you could still be in a choppy market. In our view, the Fed could still come in with some sort of QE3 at any time. So we tend to believe that the risk is that you'll remain in a choppy environment. Now, that doesn't mean you can't go after stocks. And while the market direction model may be on a neutral, I'm very bearish on a number of stocks, and I have been. We've put out some short sales setup emails on stocks like Finisar, which is continued lower. You have a gap down here. This is a perfect head and shoulders where you have the massive break down the right side of the head. You have the left shoulder here, and you have the right shoulder forming well beneath the left shoulder. That's a critical factor in the best head and shoulders formations. And so this one has worked pretty well, and we've been very specific about the types of short sale ideas we're looking at here. Because really, if you are topping and starting a bear market, you're still early, and a lot of this is in the developing phases. But you would have been able to make some money shorting these, such as Finisar, as well as the Apple call that we made uh, last week. And actually, I should change my charts here. But what I want to do first is let's take a look again at the NASDAQ. So that's what you're looking at here. You're really kind of in no man's land here. If you try to come in and start shorting, you're in danger of getting whipped back to the upside. Ideally, I'd like to see a rally back up, either retrace half of this or come back up somewhere above the 2706 level, which was this low here. So that's what I'd kind of be looking for. So we'll kind of play it by ear, but you want to watch our short sale setup emails, because if there's anything we see that's actionable from here, we'll probably put it out looking to short into a rally or a bounce on things, okay? So that's basically how we're treating the indexes right now. You're in a position for a bounce, so be cognizant of that, and be wary as a result of that. But getting back to some of these stocks again, Finisar coming down, gapping down. Actually, on Friday, volume was lighter, and earnings come out on Wednesday. I think this thing is set up to try and bounce on earnings. So if I were short this, I would just bag my profit, which has got to be at least 15, 20, 25% off the peak. The other one that we're looking at, which is still in play, is Las Vegas Sands. Remember that they had a nice big climax top, and since then have been trying to form a base. Looked like a late stage failure here. In fact, that was shortable tactically down to the 200-day moving average. And now you've had a bounce. You have another failure. Stock was hanging around the 200-day moving average here. I think we put it out somewhere around the 200-day moving average on May 17th, where we sent out an email on this. Now this is continuing lower. You undercut this low here back from late May, so it's a possibility you could rally back up into the 40 area. I would actually be looking for this to perhaps bounce up into the 40 area, and it might become shortable there. You can see that the green 20-day moving average and the magenta or pink 10-day moving average here is starting to turn lower. You have the 50-day now crossing, or actually this is 65-day exponentials crossing the 200-day simple, but now the 50-day simple is just behind, and it looks like it's ready to cross below the 200-day moving average. This may occur as you get a bounce. So I would look at something up in here into the 40-41 area, somewhere up into these 10-day or 20-day moving averages here as potentially shortable, and that's kind of what we're looking at there. Also, Apple, we talked about that as a short here on this day, and that's come down a few percent. Remember, this is a $340 stock from here, so that's like a $34 stock going to $32.50. So you're going to bounce this morning, it looks like, and I would look for a rally up into 330 to short, but it looks to me like you're going to test the 200-day. You got pretty close on the weekly chart, as you can see here. And you did actually, you're sitting right on top of the 40-week moving average, which corresponds to the 200-day moving average on the daily chart. So on the weekly chart here, you can see that we're right on top of it. So you're entitled to bounce here, and I'd watch how this bounce occurs in Apple. But you probably all know that I was on Fox Business News on Friday afternoon with Liz Clayman and talking about the potential for a top in Apple. Of course, everybody thinks I'm crazy. I've seen white men in coats or men in white coats lurking outside my house this morning, so obviously I'm not in the majority camp here. But I think just as I wasn't in the majority camp back when silver was coming up through $20 an ounce last year, I kind of like the fact that I'm not in the majority camp thinking that Apple is going down here. So it does look potentially to me that this could be a top in the stock. And I would say, 30-35% correction might be what you'd look for, 20% maybe. But from here, that takes the stock down below 300. So anybody who bought in here on the idea that all this great news was going to drive the stock to 400, I think you're out of luck for now, and probably it's going to have to just continue basing and maybe pull back. Or you could be looking at a long-term top. We don't know yet for sure, but I know that if you did come in and short on this day, you're up on the position. You can use the 50-day as your trailing stop, giving this a chance to work for you if you want. Or you could take profits and look to reshort into a bounce. That's kind of up to the individual trader. But that's really all we're looking at on the short side. I'm keeping an eye on some other stocks. Cena, for example, this is a major break. This is late stage failed base. It's a little less well defined than other situations you might see. But what I'm looking at here is this probably comes down, tests the 200-day moving average here, and it's going to bounce, and then maybe we form some sort of head and shoulders formation. The thing is, the left shoulder is way down here because there is no shoulder here, so I'm not really sure how this would set up. If it would actually go through the 40-week, come down here, it would have to come down to 70 or better to the downside, and then try and roll over from there and build the right shoulder, which to me would be an optimal situation. I'm keeping an eye also on F5, which is in this big head and shoulders, and here you're starting to come down. On the daily chart, you can see that you broke down below the 65-day moving average, but what I would say here is that the 50-day moving average and the 65-day exponential, they don't mean a lot here for F5. What I think means a lot more are these support levels. So what I would be looking at here is, the stock has broken this breakout level here, and you had a pocket pivot here, so I would have expected the stock to continue higher. Instead, it got below its 200-day moving average again, and now it's broken down through this little breakout, through this flag formation that it formed coming off the lows. So to me, this looks problematic. F5 could still be in play as a short on the basis of its head and shoulders formation. Now, the things you have to watch out for here, we think, are what's going on with silver and gold, because we've been bullish on them, thinking that perhaps they're starting to form bottoms. And the basis for all of this, of course, was the pocket pivot on May 20th in gold right here. And that's actually continuing higher. So that's actually in force. Right now we're using the 50-day moving average as a guide on the downside to sell gold if it gets into more trouble. If that happens, which it's possible it could, if the market were to come down more, I could see hedge funds and other institutional investors who have been involved in the metals recently having to sell either to meet margin calls or simply to reduce risk by dialing down volatility. And as we know, commodities tend to be very volatile, and the SLV and the GLD, as the ETFs for silver and gold respectively, exhibit that sort of volatility as well, as you can see in the charts. But basically all these things are doing right now is trying to digest the correction that you had in early May, and you have to remember that that corresponded with not only the increase in margin requirements, but also a sharp rally in the dollar, and I think that was a big factor as well. And so we need to keep an eye on the dollar here, because it has made a second low which is higher than the first low. So you have a higher low. If we were to move out to a higher high, then I think that the dollar is headed higher, and this would also have a negative effect. It's also telling you that QE3 is not in play right now. And I would watch the dollar to see when QE3 does come into play. Right now, with the issues in Europe, with China slowing down, it could be that the dollar becomes a short-term safe haven play. And we see the same thing happening with bonds. The TLT, which is the 20-year Treasury bond ETF, you can see it broke down below its 200-day briefly, but now it's rallied back above. And with all of the budget issues and the fact that we just continue to go on with the spending, this enormous, astronomical budget deficit spending that just continues to go on. And it looks like the U.S. will, in fact, raise their debt ceiling, which doesn't help matters. It only allows a debt-drunk country to become even more debt-ridden. So I don't see how that solves the problem in the long term. So I would eventually expect the dollar to come off and resume its downtrend. But we could get a reaction rally that could come up to the 200-day moving average, and I think that would be very negative for the metals and also for commodities and probably for stocks. But today it looks like we're looking at a bounce, and so I think you just kind of want to lay back and see how that pans out. If we see anything actionable, you'll be seeing short sales setup emails coming out. In terms of handling silver, in my view, I'm out of my SLV position. I think Dr. K is still holding a small position, but just something he picked up off the lows. Here, we did try and buy into this. Here, it's worked a little bit. You're consolidating sideways. You picked up volume in the SLV on Friday and broke down below the 10-day moving average. But this may not necessarily come off too much. It could just hold in here, or it could undercut this low here from mid-May, early May, and test the 200-day moving average down here. That's a possibility, and that would set up potential for a big double bottom. But right now, the only way I would be buying the SLV is on a pocket pivot, given the way it's acting recently. As far as the GLD goes, we're still holding a small position there. It's the only thing I own, but it's a small position for us, and it was taken right around here on this pocket pivot. So it's holding up so far, and I would wait for another pocket pivot to be adding or even to enter gold from here. I certainly wouldn't be entering it up here. If you got in on the pocket pivot, you're still okay, but you're using the 50-day moving average as your trailing stop, okay? And that's really the situation with the metals. And it's also possible you could see gold come down and test the lows, undercut in a longer consolidation. Right now, you don't know what it's going to do for sure. So right now, what I would do is just take the low-risk route and just sit back and let these things tell you when to buy them and when to sell them. So right now, if you have a small position gold, 50 days, your trailing stop. If you want to add or if you want to enter gold, you're looking for a pocket pivot somewhere in here. So you really want to play this cautiously right now. We're mostly in cash right now, just kind of laying back. I did play some of the short side last week, and some of it would have worked pretty well. You know, Cena was one stock that broke down very sharply. You've seen other stocks come off. Baidu coming down, and this could be forming a head and shoulders. It's got an ascending neckline, so I'm not really sure how effective that's going to be, but I wouldn't be surprised to see Baidu retest or test the 200-day moving average down above 115. Possibility, but I'd rather short this if I was coming up on a rally up towards anywhere in here from like 128 up to 132. But we'll see how these pan out. But you are noticing that a lot of these stocks are breaking down. I kind of like Under Armour is interesting. This is kind of a pinhead and shoulders type situation. You can see it reverse here. This looks shortable using Friday's high as a stop. It may rally today and bounce back up there again. The 50-day is up here, so that would be your ultimate. That would be the best spot to short in my view because it's been clear resistance twice before. So that could be a potential short sale target on a rally up in here. So I'd watch how that acts. And we may put out a short sale setup email if we actually see the precise point at which a low risk short position could be entered. I think that Lulu is another stock that's related to UA, sort of a high-end workout wear clothing retailer. They came out with earnings last week on Friday. Great earnings. Stock gapped up, bumped into the 50-day moving average, reversed, and closed at the lows. It was a weak market day, so I'm not sure if Lulu's going to try and build another base or if this could be a late-stage topping type of situation. The stock, it's had a pretty nice move since the lows of 2009, so you can see that this had a very nice move all the way up. So it's possible it could be getting a little bit long in the tooth here, finding resistance now at the 50-day moving average. If you were to try and short something like this, that would definitely be your stop. But I think UA might be in a better position if you're looking at some of these. In general, though, the retail's looking a little bit soft. The coach was looking very strong, broke out of this flag pattern up here, but now it's come back in. Some of the others, Fossil, trying to do the same thing, break out of this little flag. You had a pocket pivot back here, but it's sort of stalling out here. You had big volume on Friday. So I'd keep an eye on these too, because I think these higher end retailers, which have been doing pretty well, they could run into some trouble if you start to see the big leader among these higher end retailers, Lululemon, Athletica, come off here. So those are the things you want to keep an eye on today. It should be an interesting day, but I think you're kind of in a position where we're watching to see whether and how the market rallies. If today's rally is short-lived and the market rolls over again on heavy volume, then we could be looking at the markets, the NASDAQ and the S&P and the other major market indexes breaking down through their 200-day moving average. So we'll just have to see how that pans out. So for now, that's all we've got, and I just wanted to put out these comments Monday morning just to give you some idea where we're at. We'll have our regular Tuesday afternoon live webinar with myself and Dr. K tomorrow, right after the close. So look for the invite on that coming out either later today or tomorrow morning. All right, everybody? All right, have